Welcome to USA Global TV and Radio, where our mission is to provide education, entertainment, hope, and inspiration. USA Global TV and Radio connects you with experts and audiences all around the world every single day to help you succeed in business and to live a richer life. Visit us at usaglobaltv.com to learn about career and life-changing training and mentoring programs like the Listening Mentor. Subscribe to our newsletter to stay informed about our special programs and offers. Discover how you can become a guest on one of our shows or a host or producer of a USA Global TV and Radio show of your very own. That's USA Global TV and Radio, where the doctor is always in.
Good morning, good afternoon, good evening, and welcome home to USA Global TV and Radio. I'm Dr. JACALYN KERBECK, and our show today is The Wise Ones, where we feature people from around the world who are doing really incredible and interesting things. The star of our show is backstage, of course, with us as always. This man is a dear friend. If you watch the show regularly, you'll hear me praise him, and I will continue because he keeps doing outstanding things, not only for me, but for everyone. He has been in service and of service for decades. He is a veteran. He is a publisher. He is a longevity strategist. He's a husband. He's a father. He is a friend, and he is a human being who is operating at the highest level always. Let's welcome red.olaughlin to the show. Hello.
Howdy. As usual, you always make me kind of blush a little bit, but anyway, I'm getting used to it. But anyway, but I have to say today, May 4th, may the 4th be with you.
Thank you so much, and right back at you. So, Red, I appreciate the fact that you show up here every week. You and I know we have conversations on a regular basis. Doing this work is it's taxing sometimes, and it does take planning. It does take commitment, and you show up always prepared and ready to go. And I just want to honor you for that.
Oh, thank you so very much. It's an honor to be on the USA Global TV and Radio Network, because just so many things that are here that help people. And I have a small portion of that. The next show that we're doing is called Talking Heads. I think we just passed number 3. This is the 4th out of 6 presentations on cancer causes and options. And believe it or not, cancer is not as big an issue as a lot of people think it is. The problem is we're just not exposed to a lot of things that actually have a history of working. But all of these shows can be found on YouTube, on archive. They go out to a number of other different locations. But regardless, one of the things I love to do is to research the human body at the cellular level. I fell in love with chemistry back about 15 years of age, sophomore in high school. I knew right then it was going to be my major in college. It was. I graduated, got my degree, and literally a week later, I had an invitation to Vietnam. And anyway, never got to practice chemistry until about, a little less than 10 years ago, in the process of helping my wife as a caregiver going through breast cancer. Chemotherapy, I said, I've been doing a lot of research on motivation, self-improvement, written some books, spoke around the country, did a lot of things. I not accidentally. So let me just see what I can find out about what can I do about these side effects she was having. And then all of a sudden, okay, well, do that. That might stop that. Okay, do this, that might. And we got everything down to manageable levels except fatigue. She was taking 2 or 3 2-hour naps a day, no matter what, not eating, just didn't feel as part of the human race. And I found a book called The Walls Protocol by Dr. Terry Walls. And in between chemotherapy and radiation, we put her on it on day 1. Radiologist expected her fatigue to get worse. 48 hours later, her fatigue was gone completely. By the end of the week, she was volunteering back up at the church. The last day of radiation, she and I left Houston right after the radiation treatment and drove to Jacksonville, Florida, 1,000 miles. She followed me 48 hours after her last radiation treatment by herself, 500 miles each day, coming back to Houston. So yeah, there's a lot of side effects. There's a lot of things out there, but in general, there are a lot of things that can be done, but most people have no idea of what they are, where they're at. And that's one of the products of the USA Global TV and Radio Network, is to provide wisdom and guidance and information. I start with awareness, and then we go into education. And after that, it's up to you, the viewer, the listener, to take some action. Talk to your doctor. Is this thing something that I can do? And if that's the case, then great, we've made some progress. So with that, I'm going to bring Dr. JACALYN back. Randy Langenderfer is our speaker today, or our guest today. And I met Randy, I believe, online on LinkedIn. And unlike most LinkedIn people that give me 3 or 4 to 14 paragraphs about them, themselves, their company, what they are selling, and how much it is, and how quickly they need to be in touch with me. Randy and I, we found, okay, we live in similar part of town, not that far away. Let's get together and talk in person. And we did. And it's not much different than doing a Zoom call with somebody and getting a chance to know them a little bit more before anything really develops. And in the process of talking with Randy, I said, Randy, you'd be a really great guest on one of the shows that I'm involved with on a weekly basis. And so that kind of led to a little bit more discussion. And sure enough, Randy says, here I am. And here he is.
We're going to be talking with Randy about commercial real estate. There's some really interesting nuances of it. And I'm always a big fan for making money while I'm taking a shower. So let's find out what Randy's doing in terms of commercial real estate and how he can help all of us here. Welcome, Randy.
Good morning, good afternoon, good evening, wherever you're at. Like you said, Dr. JACALYN, that's a pleasure. And Red, we've only known each other for a short time, but I did not remember that story about your wife. That's an inspiring story. Really enjoyed that.
Well, it's hard to put everything out at one time, but we do the same intros here a lot. And sometimes I talk about my military background, sometimes about some other things, but sometimes you need to bring in a little bit new just to kind of keep the information flowing. And there's just a lot of things out there that we haven't touched on, but you can't just do a core dump at one time because you have nothing to come back to. But yes, it is absolutely amazing what that action that she took made in her world. It was just like, I don't think she took a nap for another 2 years.
Wow.
It's incredible.
That is
thanks again for sharing that. Randy, you have had a successful career in corporate, and you went out on your own like many of us did. I did in 2020, and you started getting involved with real estate. And so you are the president of InvestArk Properties, and your focus is on multifamily investment opportunities. Tell us a little bit more about how and why you left the safety of corporate and went out on your own. What were you thinking?
Well, and it's really fresh. So thank you, Dr. JACALYN. I mean, it's really fresh because I've actually just officially left employment on March 31st. And so I'm 1 month out, 6 weeks maybe, and truly enjoying it. But I would start my journey back. I live in Houston, Texas today. At the time, I was living in the Cleveland, Ohio market, and I was working for a private equity company and realized that at the tender age of 55 that I was not going to have a job and needed employment. And not only really needed employment, I needed to work late in life. I'm a single family earner. My wife has always been staying at home, taking care of our family. And we have a special needs son that requires a lot of that. So I just knew that I was going to be working late in life. I was fortunate enough to find a job at a large academic medical center here in Houston and as an executive. And so I really set about a long-term plan to transition to something else, because like many of us, that corporate world is it's beneficial in terms of an income and career. But as you gain later in life, at least myself, I learned the corporate bureaucracy and some of those activities really, my tolerance level for that began to diminish day by day, and realizing that it is a young man's and young woman's world. So it's time to think about something else. And for me, I had a brother-in-law who had gotten displaced for a large regional bank, highly educated in the Northeast or Midwest, I should say. Highly educated. He was a JD MBA, and he asked me to start flipping houses with him, and to which I said, "You're crazy." But as we spoke and got more involved, and I gained comfort with it, so I really analyzed it from the risk perspective and the downside and the upside, and stuck my toes in the water and invested my first investment in a multifamily back in 2014 after coming here in 2013. And so since then, I not only found something that can provide me passive income, but something I really enjoy, something I like to work at. Very intellectually challenging compared to what I've been doing in my day job as an executive at a large academic medical center. And so that's what really got me into it. And then I got fired up, and then I started just investing and educating myself and taking off. And so I think you said in my bio today, I'm a passive investor in about 4,000 doors. I'm a general partner in about 1,500 doors, another 1,500 doors and across the Sun Belt, and looking to do more. And so that's what I'm up to these days.
Congratulations on making that change and that big smile on your face. You look very happy.
Yeah, when you take that, you sign that final goodbye and you realize your income, you've been working for an income for a long time. Intellectually, I knew I wanted and had to do it, but it's still like, ooh, I'm not going to have an income. At least not as big a one, put it that way. I have an income, it's not as big a one.
I know exactly what that feels like. But the good news is that you get to follow your passion and the money will come.
And that's exactly it. It's my father told me as a kid, find something to love to do and you never have to work a day in your life. And I just think that's really true, at least in my example. And I knew that I wanted to work late in life, not only because I had a special needs son, but also because that's just my nature. I play golf, but the thought of playing golf 3 times a week sounds like work to me. And so I really wanted to find something that for the next season of my life that I could do for another 10 or 15 years.
Oh, so you're going to retire in 10 or 15 years?
Well, I don't know. Slow down, maybe, Red. Slow down more.
Slow down might. I think that's probably the real thing, because if you really and truly love it, it's just going to keep growing and growing and growing. You got to say, I really need to kind of back off a little bit, because you want the hands-on that you can control. So when you have 40,000 units, you're not going to be knocking on every door.
No. And I had the woman who recruited me to Houston as a federal sitting judge. And at the time, this was 10 years ago, she was low 80s. She's got to be low 90s now. Just a fantastic woman. And she said to me, Randy, I'm convinced the fountain of youth is having something to do every day that you enjoy. And that has resonated with me ever since, that have something you enjoy to do and it's not work. So
beautiful. Randy, let's talk a little bit about real estate investment for people who are not aware. What is passive income?
Great question. So at least, there are many different ways. So I start out by saying I worked for a large academic medical center that had $1.5 billion endowment fund. And I'm a finance educated guy. I'm an MBA, CPA, and et cetera. And how much of that I started looking at, they had their traditional portfolio diversification strategy between bonds and equities and international and blends and high risk or growth, et cetera. But about 6-7 years ago, they started to actually break out a piece of it. It was bonds, funds, and real estate. So as of today, this $1.5 billion portfolio has between 8 and 12% in real estate, which is a major shift in a lot of portfolios across the country. So I always use that as an example. Is it right for everybody? Probably not, but I think a lot more people should be in it. And because that it can build passive income. And when I started a journey, that's exactly what I wanted, was passive income. So, that's where you get a check every month, or you get something deposited into your bank account. And the way that happens in multifamily, there are many different classes of assets. You can get in single family, multifamily, industrial, self-storage. I've concentrated on multifamily because I really like the economics behind it. And everybody's got to live someplace. I don't always need to have a warehouse or the latest iPhone, but everybody's got to live someplace, and that's a changing demographic. So the way to get passive income is to invest in a private placement offering, which is not something your traditional financial advisor is going to offer you, but that's the way the wealthy really do it in commercial assets like this. And what that does is as the property creates funds, they create positive cash flow. It's distributed back to you as the investor. And also upon sale, upon appreciation, you get your share of it accordingly.
Sounds like a win-win. So I just want to throw one thing out there too. My father was a real estate investor also, but he also would say, you can't take a brick to the bank. What does that mean, Randy? What do you think he meant by that?
A brick, I've not heard that one, but I'm going to write that down afterwards. I think what he meant for that is that these are very illiquid assets. They're not something that you just put in and take in and out of like a savings account. They're in a long-term investment. And so you really can't get in it and just extract your investment like you could a mutual fund 6 weeks or even 6 days later. And so, when you buy an asset like that, you're in it for at least between 3 to 7 years normally. And it is an illiquid asset. But in the meantime, you're going to have distributions coming to you periodically, whether it be monthly or quarterly, for that passive income flow. It's really no different than if an investor were to buy a dividend paying stock where they're getting distributions periodically, and at the end they sell it and they get it, hopefully appreciation gain from it. So you tell me now, what'd your father tell you it meant?
I think you summed it up perfectly. You sound just like him when you said it. So bravo. Randy, for people who are watching and they're not invested in real estate, maybe they're invested in the market and they feel that that's the safest because it's regulated. What do people need to know? Let's just start off about being an accredited investor versus not being accredited.
So there are two ways to get in a private placement offering. The private placement offering is just it's a non-regulated security. When you buy a mutual fund, that is a regulated security. A private placement offering is a non-regulated security. And in that, there are two different venues under the exceptions of the Securities and Exchange Law. There's a 506C as in Charlie and a 506B as in boy. And the 506C requires each investor that coming into it to be an accredited investor. And that means that you either have a net worth, it's an or, you have a net worth of $1 million, excluding your primary residence, or you have an income of, I think it's $200,000 individually or $300,000 joint. So that qualifies you. Then you have to meet that accredited exception to invest in a 506C offering. In a 506B offering, we can also accept sophisticated investors. And that really simply means you can lose the $50,000 or whatever the minimum investment is and still live day to day. So there's two different types of offerings there. Most people try to attract the accredited investor because it implies from myself as a general partner that the investor has potentially the money and can live without it. They can, if they lost it, they're not going to be on a breadline, literally. And if they can wait 3 to 7 years, as I said, for their total return to come back. Sophisticated investors, though, is growing. And from the seat I sit in as a general partner, it's actually very attractive because it just opens up the investor pool a whole lot more. So just ask the general partner what kind of offering this is. Do you accept sophisticated investors or do you accept both?
Excellent. Thank you. You would get a 10 out of 10 on the real estate exam for those questions. So well done. One more question, then I'll go over to Red. And I'm just asking questions that the audience might be interested in. So if someone wants to get into this field themselves, do they have to have a real estate license or do they have to be a real estate broker?
The short answer is no, you do not have to be. So as an investor, you don't have to do anything and your investment is limited. That's the other thing as a limited investor in this. Your loss, your risk, I should say, your risk is limited to your investment. In the very worst case, you could lose your investment, just like you could in the stocks or bonds. And to a general partner, we have more at risk than does the limited partner. But you don't have to have a license, a real estate license, because it fits under those 506C and 506B exemptions of the Securities and Exchange Act. So no, you do not have to have that. And that's why you see, quite honestly, the proliferation of this with a lot of people. There's a lot of Randys out there doing what I'm doing today, heating up the market and raising prices and et cetera, et cetera.
Thank you, Randy. I'm going to let Red get a question because I could keep going for hours. Red, go ahead.
Well, I'm going to take him back into the academic environment he was in just prior to that with the medical industry. At some point in time, you said, okay, this looks like something I want to do. What kinds of things did you have to transition your life into doing? Obviously, there was education, there was networking to talk to people, kind of lead us down that path of, okay, this is what I want to do. How am I going to be successful in it? So that if somebody else who's been working for 30 or 40 years saying, I have a nice little nest egg over here. I don't mind losing a little bit if the risk is right. What kinds of things went through your mind when you were preparing to step away from that monthly paycheck?
I guess early on, and that's a great question again. Early on, the thought was I knew I had to maintain my employment for several years yet back in when I started this in 2013, and I knew that I wanted to continue it just until I got to a position where I was really comfortable stepping away because of being a single income earner. But for me, I was looking at something I could start to do part-time, something I didn't have to do full-time and just cut the purse strings immediately. So I was looking for something that was part-time. I was looking for something that kind of fit my personality. I mentioned I'm a finance person at heart. So I really wasn't into being a landlord. I didn't want to do single family flips. I'd done that for a short time, but I didn't want to own single family units because I don't like dealing with tenants, calling, the toilet's not working or the air conditioning's out. It's a beautiful thing about multifamily is we have property managers that deal with those tenant issues. So I wanted something part-time. I wanted something to fit my personality. And then when I really started to see some of the potential financial gains, it was very attractive. And back to the stock market question, I said, what the heck do I take all the volatility of the stock market for when real estate is always going to appreciate over a period of time. And back to somebody always needs a place to live in. So I got real comfortable with the risk profile that it was much less risk in my mind. Another thing I'll say in there is, Red, we've known each other for just a short time, but as a private placement offering, people call me, the investors call me, and they talk to me about the investment. Well, I'm in many different mutual funds in my 401k. I can't tell you how I'd ever find the money manager sitting someplace in New York or San Fran or Chicago. I have no idea how I'd get a hold of them. So there's a real personal element to it as well, and people just have to decide. It may not, and when you leave corporate, it may not be what I'm doing. Hopefully, something different, unique for you. Maybe it's volunteering at your local church. Maybe it's I have siblings that are the primary caretakers of the grandkids, and they love it. And so you got to find what it is that's going to help you get out of bed in the morning, and when your feet hit the ground, you're excited to go.
Thank you.
One of my navigators, single at the time, didn't spend a lot of money, and he invested in real estate, moved from California to Texas, invested a lot more. And then one of those rarities in real estate, everything collapsed on him overnight, and he lost a lot. Swore he'd never get back into it again. Of course, he's now retired. But it was one of those, he was in there what appeared to be the right time. He had property in Hawaii, he had property in California, and property in Texas, and everything was growing. And then, whoop, all of a sudden the big recession hit. And so there is some risk in real estate.
Sure.
But again, do you have the wherewithal to last through it? And being a single family resident owner of several of those, and those things dry up, there's, you have a big risk because you got to, that's where the money comes from. You have to have somebody paying the bills.
Well, and that's the differentiation between single family and multifamily, right? Is I got one unit that's vacant in single family. I got 100% vacancy. I got, 100 apartment unit building, and I got one vacancy. I got a 1% vacancy, and it's much easier to weather it. But yeah, I would also go back to your friend who lost a lot. It is a business, so nothing is risk free. Nothing is risk free, but I would say there's been a lot more cases of people building wealth through real estate than, at least that I'm aware of, through the stock market or insurance or other venues.
Yeah, I would agree. The same thing. Things cycle like oil. There are times when the price of oil and gas goes way up. Times it comes down. Real estate. I mean, here in Texas, for it seemed like years, decades almost. The price of my home never changed. Now all of a sudden it's 3 times what it was 10 years ago. It's crazy, but it's the environment we live in, and whether you choose, that's something I want to become more aware of. I want some education. I want to know more about it to make an educated guess as to this one. But with you and with me, there's a certain passion. So it's not what that opportunity has, it's what the passion is inside you to continue that growth.
Yeah.
And just having that interest you need more than that.
Well, you need more than that to be an active investor. If you're owning single family homes or you're doing a general partnership in multifamily, but the average investor can get into this in the multifamily space and via being a limited partner and investing in one of these things, they don't have to worry about, as we say, tenants, toilets, and termites, or all those operational issues. They can get a monthly email about the status of the investment and a monthly check. And that's the extent of their involvement. So it can be very passively. And the beautiful thing, the 3 reasons you get into commercial real estate is positive cash flow, forced appreciation, and favorable tax treatment. So you get those 3 elements that you don't get in the stock market as well. You don't get the favorable tax treatment in the stock market. And even if you're in a REIT, a real estate investment trust, the tax advantages to owning in a private placement memorandum are better.
And to your point, Randy, if everything's going well, you're just getting a check. You're getting a deposit in your account, and you don't need to know anything else. And then at the end of the term, you're going to get your money back with appreciation, or you rolled into some other project. So a question I have for you is just about the commercial real estate market in the United States. Let's just talk about on the East Coast, for example. Before and after the pandemic, we heard, at least I heard here, I'm from Philadelphia originally, that people were literally running in droves out of New York to get out of New York, and people were going into North Jersey. And so commercial real estate was going up in price there. And I'm down here in South Florida. People are coming here all the time. I'm sometimes worried the state's literally going to break off into the ocean. But what do people need to know about trends in commercial real estate?
Well, I think I'll pause first, Dr. JACALYN, and talk about that definition of commercial real estate. So there's really four different classes within commercial real estate. There's office buildings, there's retail, there's industrial, and there's multifamily, are the 4 big classes of real estate within the commercial umbrella. So if I look at retail and office, I don't know about other people, but I'm really not interested in that today because of the Amazon effect in the retail world and the work from home effect in the office world. The other one is industrial, primarily warehousing or commercial buildings like that around America. Those have are in pretty good favor right now. But that last one of multifamily is probably the darling right now, and has been of those 4 classes for the last 5 to 10 years because of that impact of people needing a place to live. And so you can get in this fairly easy. And those trends are commercial. I mean, the multifamily prices, wherever you're at, whether it's in Jersey or Florida or Texas, those are all going up, and they have been going up. They haven't come down yet. Yes, there are cycles where there'll probably be something down sometime, but we haven't seen that yet because of those macroeconomic trends we want. So I'd encourage the audience, if you're interested, love to chat with you, but do a little research in terms of those different asset classes and which one you want to get in. And I'm going to highly encourage you to be in the multifamily one for the reasons I just mentioned. But there's a plethora of opportunities out there, and I believe everybody should have some part of their portfolio. Just a matter of how much you want to allocate to it, to real estate.
How did the pandemic affect multifamily investment?
There's flashback. A couple of years now ago, we all were sitting on pins and needles, thinking the sky might be falling. But the reality is, overall, nationally, it suffered maybe 3 to 5%, no more than that, and that was just because of all the government's influence and all the government's money they were putting in and not letting us evict tenants. But the asset prices did not decrease. It was really just the monthly rental income that was impacted. And so again, over a period of time, post-pandemic, that's all back up. That because all the flood of money in the economy, rent rates have been rising across the country the last couple of years, double digits. This year is predicted to be much less, probably in the single digits, low single digits. But again, the resiliency of real estate over the long haul.
Yeah, and that pandemic was an outside force or influence, just like the inflation that we've been seeing here for the last year and a half, 2 years. It's you may be making more money, but your money can't buy as much as it used to.
Yeah,
and that obviously does have an impact on people's ability to invest. But with regard to inflation, I would have to think that inflation, your investment's going to go up in value. Over time, your income from that investment will probably go up in value. But I'm not saying it. Go ahead.
No, I was just going to echo what you're saying. I think that's kind of people say, when is this a good time to get in it? And the short answer is, well, the best time was 20 years ago. The second best time is today. And inflation is relevant. We can't deny that. But just like you said, your primary residence home value is going up because of inflation too. So on the commercial side, so are the values of our properties going up. So are the rents going up. I think the challenge is the expenses are going up. And the challenge for operators such as myself is to really manage that delta between the income and the expenses to make sure we're maintaining a healthy profit margin and we don't let expenses run away from us.
Inflation was a very interesting topic in an international finance course I took many, many, many years ago. I didn't realize how complex that calculation is, and it's not something you jump into, and it's not something you can jump out of. I mean, it has some degree of volatility, but it you can't say, well, in 6 months it's going to be down to 2%. It's just
right.
It's lagging in many, many regards, but it affects everyone. It's just you have $50,000 in the bank. Well, yeah, but what that 50,000 buys today isn't what it bought 2 years ago. So, but it is a factor.
I was listening to a Robert Kiyosaki interview yesterday, and he was talking about just that very topic and saying, why would you try to save money now that inflation is going up, or you get a better interest rate? He goes, because, and his primary premise was that the government can always just print more money as they did, which lowers the value of your dollar you saved, even though it may be $1.10 or $1.20 today. But the investing in different smart vehicles is going to rise greater than that. That's really your only chance of staying up with it.
Yeah.
Randy.
Go ahead, Dr. JACALYN.
Thanks. I wanted to just talk with the time we have remaining about your role as president of InvestArk Properties. What types of opportunities can you offer to interested investors who are out there?
Well, right now we're focused, InvestArk Properties, we're a small boutique company here in Texas. I had a lot of big staffs and stuff in the corporate world. I no longer seek that. So I have virtual employees or 1099 employees that help me. But I have been focusing on partnering with people that have specific expertise. So I'm in the Sun Belt. I think I mentioned I'm in Houston, Dallas, Greenville, South Carolina, and Tucson, Arizona. And each of those, I have partnered with people that have specific niches or skill sets that I don't have for that area. And I think that's a real value that I bring in that. The area to look at is I like those Sun Belt regions where the population and the income growth is occurring still to justify some of those purchases. And I just lost track. What was the other piece of the question you wanted me to answer?
The opportunities that you have to offer to potential investors.
So the opportunities are in those Sunbelt regions for those reasons. I'm from the North and the Midwest, but I have invested myself in some of those areas, but I have not asked my investors to invest in them unless it's a really great deal. And there's just the Sunbelt. I don't see that trend reversing for any time in the foreseeable future, where just the population migration, the growth in the Arizonas, the Carolinas, the Floridas, the Texas. I just don't see that reversion occurring anytime soon. And why would I want to fight against those macro trends? That's not to say there are unique opportunities, or I'm not criticizing anybody that has opportunities in Utah or Wisconsin or Ohio. I'm just saying I don't study those markets and don't have the knowledge base for those as much too. So the short answer, Sunbelt region. I'm sorry I gave you a long answer.
That's okay. I was just trying to break it down for people who are watching. So let's say they are interested, but they're not in Texas. Do they have to make the trip out there, or you can send them materials?
The easiest way is I can sign you up in I produce a monthly newsletter where I try to keep the investors involved. And then like right now, I'm just finishing up an acquisition here in Houston area. And when an opportunity arises, I publish it. I send it out to the investor database. There's an investment summary that shows all the mechanics of the deal, where the location is, the size of it, the market, the financials, the business plan. And then if the investor wants to proceed, great, love to talk to them about that. And if not, I found I've got people on my list, and then all of a sudden they for a couple of years, and then all of a sudden some event happens and they call me and say, Randy, when's your next opportunity? So a couple of those investors from Ohio. And so you don't have to live nearby. There are investors who want to see the asset before they invest, but I have people from out of state that in this recent Houston opportunity, it's just a matter of gaining comfort with. You can see an awful lot on Google Earth these days too, to get the neighborhoods and a feel for the specific area. So not essential. But I would always encourage investors, if they want, to come and look at the asset.
Thanks, Randy. Oh, sorry, one last question. And can people come in through cash, or can they come in through an IRA? How does that work?
Yeah, they can come in basically any of those vehicles. They can come in an LLC, a trust, IRA, a solo 401k. Any of those options are available to investors. So most people think you may not have money to invest in something like that. But to your point, Dr. JACALYN, there's people with a lot of money in 401ks from previous employers that if it's a previous employer you had, you could put that to use in an asset such as this.
Thank you. Now over to you, Red.
Okay, you own the business. You're president of it. How many hours a week do you work? 5 days a week, 8 hours a day. What kind of days do you typically have?
Well, I would say for the last 6 to 8 years, I've been burning 60 plus hours a week between my day job and this, and that's one of the reasons I wanted to get out of the day job. But my target is 30 hours a week to do the real estate piece of it, and then the other piece of I look forward to doing some volunteering and some other good works here and the second season of life. But you can work as much as you want. A passive investor isn't going to work anywhere near that. They're going to work probably 3 hours analyzing the deal and writing a check, and then they're done. Again, this is what I choose to do.
Thank you so much. Lots of great information here. And I know we're just tipping the top of the iceberg. So if you would love to come back, we'd love to have you, because I know people are very interested in real estate, and giving them some educational background, I think, is the first step to alleviating any concerns or fears that people have.
Well, you're absolutely right. A lot of my job today is just that, is talking to investors, and I put out opportunities, but I don't really expect some of the people to invest. I always encourage them, just watch us watch it for 6 months or a year, and there'll be other ones. But you're absolutely right, because, that's great though. I love to talk to those investors who are really asking questions, because, at work, I put money in a 401k for years. never just blindly put money in there. And I've got lots of money in some IRAs, but when people have to write a $50,000 check, it becomes a different story. They become very engaged, and that's good. And I encourage people to be an active, passive investor.
Thank you so much, Randy. We have your information here at the bottom of the screen, which includes your website. Is there anywhere else you'd like people to reach out to, follow you on social media?
Thanks. Yeah, on that webpage there's a contact me. I'd love to chat with you if there's something I can do for you. It doesn't even have to be about real estate. I'm also on LinkedIn and Facebook. You got the spelling of the name there, Randy Langenderfer, on LinkedIn, and would love to connect with your audience at their pleasure.
Yeah,
Thank you very much.
Langenderfer is Langenderfer.
I'm sorry.
And his website for those people on the radio listening is the typical www.invest-ark.com.
You can go out on YouTube and find us afterwards too.
That's right. And we'll be replaying this show 5 or 6 more times in the next few days. So if you didn't get to watch it live now, you can watch it on the replay. You can go over to our YouTube channel, which is USA Global TV and Radio, and look for the playlist, The Wise Ones. So thank you again, Randy. We wish you all the best and hope that you'll come back and see us again.
Thank you. It's been my pleasure. Both of you. Great to meet you.
Thank you. Good to see you. Bye-bye.
Bye now.
Such an interesting topic. It's always been something of interest for me. How about you?
I have had quite a few friends, even my neighbors here, that are in single family dwellings. My exposure to multifamily is probably 1 or 2 people. It seems like right now the people that were in that are now buying storage facilities more than anything else. But over time, things change. It's just who you know, what do they do, and who do they know? And so yes, there's a lot of that out there. In fact, my brother-in-law introduced me to somebody that was in his songwriting group, and he had sold over 1,000 properties, and now he's actively buying and not even sure about selling, but the storage units here, there, and yonder. It's just so a lot of opportunities out there that have some aspect of real estate in them.
Very true. It's funny, on a different topic, there was a comedian, I think it was George Carlin, and he did a whole bit about storage facilities, about how we spend so much money buying stuff, and then we need a bigger place to store our stuff. And it's kind of funny. Then we get older, we're selling all of our stuff, we're giving our stuff away. It's an interesting philosophy, but I truly believe that investing in real estate is the way to go. I just know when my father passed away, he owned properties, and that has given my mom a great lifestyle, and they'll just keep going. So I think it's something for people to look at, diversify whatever you're in, and maybe include some real estate. And obviously we're not paid spokespersons here. We're just providing education. So Red, you have your show coming up right after this. And I know you told us a little bit in the beginning. Tell us a little bit more as we close out today.
Cancer is an interesting disease. There's a couple of general theories on what causes cancer. One's a genetic theory that DNA is breaking down, mutating. Another one is the metabolic theory, that the actual cell itself at the mitochondrial level influences the cellular DNA disruption. And we talked about that in the first episode. We've been going through talking about how various aspects of this and that affect cancer and cancer growth, and what can counter some of those things. It was interesting, fasting, 24 hours before chemo is a major improvement on the effectiveness of the chemo. But you do a 48 hour, it's even more. And not only does it make the chemo drug much more effective, but it also protects the normal cells next to it. But as we go through this thing, I'm trying to provide both sides of the equation. Let's talk a little bit about the standard of care, our chemo and radiation. What can you do? What causes these things to happen? What influences cancer cells to start with? What influences their growth? What can you do about it? And then let's get into what are some other treatments that might not necessarily be top of the line treatment, but they are very, very effective. Just most people don't know about them. And that's what we'll be doing here, not today, but over session 5 and 6 over the next couple of weeks. I'll be heading back more into the metabolic area and some treatments that are out there that again from an awareness perspective, most Americans have no idea, and that's what we're concentrating on. So join me here. Let's see, I think it starts at 2:00 my time, Houston time, Central Daylight Time. Every Thursday is the Talking Heads. That's the show we're leaving the wise ones, going to the Talking Heads. So that's all my previous episodes are on USA Global TV and Radio Network on YouTube. Please check out the archives and join me today if you can. If not, please catch one of the archives. Thank you, Dr. JACALYN.
Thank you, Red. I love everything you're sharing, and this topic is so important. So I'll let you get your roller skates on and go over to the other studio, and I'll be with you shortly.
I shall do that. Take care.
Thanks.
Bye now.
Bye-bye. And thanks to each and every one of you who are out there watching or listening, whether it's on the live or the replay. What I'd like to share before we close out today, if you didn't know, I'm very involved in the Crohn's Colitis Foundation. I've been a patient for 33 years. Yay. And we have some super exciting events that are coming up that I've put on my Facebook page. So if you can go and follow me, JACALYN KERBECK or Dr. JACALYN, you'll find out more about them there. The one event that's coming up the soonest is the Crohn's Colitis Foundation Take Steps Journey to Mount Remission. It's June 25th. And if you would like to take a tour of the Philadelphia Eagles locker room, how exciting would that be? You can join me, Dr. JACALYN's Colitis crew. You can join me. We'll be broadcasting live, USA Global TV and Radio. Just get in touch with me. You can go over to either of my websites, usaglobaltv.com or drjacalyn.com. Contact me if you'd like to be a team member. And of course, all donations are readily accepted and go directly to the foundation. So thanks again for being here. Thank you, Red. Thank you, Randy. And we will be back with Talking Heads right after this. If you'd like to be a guest on any of our shows, please go over to our website, usaglobaltv.com, book your session. And as I mentioned, we have 37 different shows that you can choose from. And we're bringing on new co-hosts and hosts all the time. So if you'd like to have your own show, you can reach out there as well. Contact us. Thank you very much. Bye for now.